The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk about taxes and everything that's happening in the wonderful world of taxes. And I will tell you, look at it, it's mid-September. We got October, November, and December, and the jig is up. And so this particular hour, we want to talk about some of the changes that have taken place and how you can implement them into your budget, into your tax situation to save money. I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. I talked to Glenn earlier in the week, and he wanted me to tell you hi, Glenn Wiggle. So I am saying hi from Glenn to you. Yes.
That's great. I called him when the hurricane was raging, and I wanted to know if he wanted to use my house because he's on the East Coast, you know.
Right.
And thank God there was no hurricane that came up this end. So,
yeah.
And Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. Okay. Hey, let's talk about taxes. And first of all, let's talk about tax school that's starting, right?
Yep. School starts October 12th, 13th. So coming up here, it meets twice a week, either in the mornings or the evenings, or there's an online version. So as Esther says, you don't have to get out of your PJs.
In your PJs. You can learn in your PJs.
It's free of charge. You do, however, have to purchase the book and the workbook. If you're a frugal and computer person, you can just pay $50, $60 and do it all electronically, or you can get the paper books for like $120, whatever is
I know I'm
fitting.
an old dog, but I learn better with paper.
Me
than
too.
I
I
do.
make notes and things
I mean,
like that.
I just can't read on a computer screen like I can read in a book. It's about going back and underlining, but to each his own. If you're adjusted that way, that's
right. And the hope is we teach you taxes from A to Z is that you're going to work at one of our 30 offices, and it's a great opportunity. I tell people on the phone, you help people in such an amazing way. And I think, like you say, Esther, all the time, it's a respected industry. People respect you, and you give good advice, and you help them steer them along.
Because it's not easy. I mean, when we're going to talk today about some of the things that you need to watch out for the last quarter if you want to save money in your taxes. And it takes planning. And if you're there all on your own, you don't know to think about putting money into a pension plan. You don't know about a solo 401k plan. You don't know about a lot of these things that really cut your tax bill and really increases your wealth, because while you're not paying taxes on a lot of these things, it's because you're putting money into investments, which ultimately, when you get older, is going to be there when you retire.
Yeah, it's so funny. You and I and Chris were walking into the studio, and they have a big bulletin board. It says, don't forget, Entercom also has Roth IRA, so put money into a Roth IRA. And so we educate people that might not be the answer for them,
That's true. It's just because it's popular doesn't mean that it's the best. And it really comes down to a mathematical equation, and you got to do the math.
Yep.
Right?
That's right.
Okay, Chris, you're going to talk about the star rebate and some of the things that people need to know about because it's such a mystery. So if you're a homeowner, listen to Chris. He's got the update.
Yeah, first of all, if you're a new homeowner, make sure you register your house through the New York State website. It is, pulling up my iPad, tax.ny.gov/star. So not that hard, tax.ny.gov/star. You register your house. You only have to do it once. So if you did it 5 years ago, you're good. You don't have to do it again. It's if you just, you're going crazy because of the housing market and you bought a new house, you got to register your new house.
What if you never registered it before?
You got to go to the website and you got to register it.
So I lived there 30 years now. Do I register it?
Yes. Yep. And unfortunately, you can't go backwards. They'll only go forwards, and you'll get a savings in your school property taxes.
So if I don't have a computer, what can I do?
I would go directly. Well, you could call us and we can help you. Or you can go probably right to your local town, city, your town hall, and ask them how can you register without a computer, and they should be able to help you right there and then as
All
well.
right, but they can also call EG Tax, and we'll help them come in. They can come in, and we'll sit down with you and help you to register for your STAR exemption.
Right, and
All
it
right,
could
so
be anywhere.
after you're registered, then what?
Then, depending on your income, if you're under $250,000, you will get a reduction in your property, in your school tax. So if your school tax is normally $1,800, you will say you have a $400 STAR savings. Your mortgage, or if you pay it yourself, will only pay $1,400 for your school tax. If you're over $500,000, you get a check in the mail. So you pay full price for your taxes, your property tax, your school tax. Then New York State sends you a rebate check in the mail.
If you make if your adjusted gross income is over $500,000.
Right. And now
So
everybody's...
that's a substantial amount of money.
Right. And now everybody's going, well, what about the people between $250,000 and $500,000?
$100,000, right.
They get a choice. And you got to think, why would New York State offer a choice? What's in it for them? But they can choose to either get the reduction in their property taxes right away, so they pay less amount in October, or they can elect to get a check. Now, New York State, I love this. Let me just pull it up. It says that due to recent changes in laws beginning in 2019, the value of the STAR savings may increase as much as 2% each year, but the value of the STAR exemption savings cannot increase. So they're trying to entice people to get checks. They're saying, oh, it could go up 2%. It's not that it's going to go up 2%. It may go up 2%. So you got to think New York State's making more money on issuing checks than they are doing the reduction of the property taxes.
Okay, but again, that only has to do with that small window of people of 250 to 500,000.
Right. Yep.
And that's
And then a texter wants you to please mention that is the last year for the tax relief rebate checks.
Okay, well, this is what I'm right on the state's website, and there you either get checks or you get an exemption. So maybe that's the bonus that they were giving. Because, New York State has all this extra money.
If the texter would text us, Tiff, you got their phone number, their text number right there. Tiff, can't you text them back?
Yes, ma'am. What do you want me to text them back? What do you want
I'm
me to...
Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Our text number is 3930, which somebody took advantage of. And we're talking taxes, yes.
Sorry, another texter.
No, I already told them.
Okay.
We're going to get to that text on the other side.
Oh, okay. Sorry.
I didn't know that. Is that what we're going to do?
Yes.
Okay. I'm Esther Gullius. All right. If you have any questions, 8030930, 8030930, star 930 on your cell phone. 3930 is our text number, and we're going to talk. We're talking STAR rebate right now. If you have any issues with that, let us know. And we're going to take a short break. We'll be back. We're going to talk about some business write-offs and some things you got to do before the end of the year if you don't want to pay a bunch of taxes, especially with RMDs. Well, I'll see you on the other side.
We are family.
Got all my family with me. Hey, I'm Esther Gullius, the tax lady from EG Tax. We're talking taxes. We're talking about STAR program. We're talking about if you're behind the eight ball. Remember, extension deadlines coming up October the 15th. EG Tax will get it done. Any questions you have, 8030930, 8030930, star 930 on a cell phone. And our text is 3930. And we have a text, Tiff, that...
Right.
Yeah. Go ahead, Chris.
Oh,
right.
Right. The person also texted back about the extra check. Okay. And it's right. If your school district stayed within the 2% increase, then you also received a bonus check, and that's the last year for the bonus check.
That was for them to comply with the cost-cutting measures.
Correct.
Right? That was your municipality.
Yes.
So that was the last year for that. But the STAR program going forward is still going forward.
Correct. And the enhanced STAR is still there, too, for seniors over 65.
All right, and we got another text in. Tim?
We do. It reads, "Are you okay with part-timers? My 23-year-old daughter is interested in tax school, but already has a great part-time job. Come tax season, she might work for you part-time." And we
That would
say,
be great.
that's great.
I mean, we have many part-time employees that are great, and especially if she's like in an accounting, if she's going for a CPA, this is right up her alley. So, but she still would have to come to tax school because we want to make sure that we only hire the most qualified people. So have her call us. That would be
Right.
great.
Yep.
Yeah, and part of the thing about tax school is you're learning the software, and we're doing lots of practice, and we're together, beating ideas around and teaching you, So the school is a great opportunity.
Okay. We have another text too, right, Tiff?
Bob from Alma. STAR program. Is there a STAR program for people over 65 to get more money?
And that's what, yep.
That's the enhanced star.
That's the enhanced star based upon your income. Yep, you can qualify for an even bigger reduction in your school.
But again, it's all done by registering through the New York State website.
Right. The basic star is, the enhanced star is at your local town or municipality itself.
Okay, so you register for the star on their website. The enhanced star, you go to the municipality, correct?
Correct.
Okay, so you do have to make a trip to the municipality.
If you're over
a senior,
65. Yes.
Right?
Yes.
Okay. All right. Okay, let's talk about, and again, 8030930, 8030930, star 930 on a cell phone. One of the things you want to do, especially if you're a small business, is they're doing 100% bonus depreciation now, which means you buy it, you can write it off. Now, there was a 179 expensing that you could have done in the past many years, but there were criteria established with that which made if it's machinery or equipment, you could do it. But now the 100% bonus depreciation is even allowable for improvements in your business, as long as it's not to add on to the square footage of the business. So, for instance, if you were remodeling the inside of your building, you can do a 100% bonus depreciation, which is remarkable. So, if your business is making money and you are spending $100,000 improving it inside without expanding it, and you're in the 20% tax bracket and you're self-employed, you save about $22,000 in taxes, federal and state, by making this election. And if you're going to do it, now's the time to do it, because we're running short on time. Winter's going to be around the block, unfortunately, but you have to have it done before and paid for before 12/31.
Correct. And put in business use.
And put into business use, right. So, and then the other thing is they're loosening up the depreciation on vehicles.
Right. The before they used the limit for a luxury vehicle was very small. We're going to say it was like $23,000. Whether you bought a Hyundai or a Mercedes Benz, you were only allowed to depreciate up to like $23,000. Now they expanded that even greater, which I don't even think they even have a limit on that now. Correct?
Well, no. The bonus depreciation first year is, if you don't claim bonus depreciation, the maximum on a luxury vehicle, if you call it a luxury vehicle, is $10,000. If you do claim bonus depreciation, it's $18,000, and it used to be $3,500. I mean, so they've really substantially loosened up a luxury vehicle, and they also have taken out of the listed property computers. Remember when back in the day when listed property, when computers and peripherals were all listed property, and now they've lifted that restriction, and it's no longer listed property. So a lot of the restrictions, straight line depreciation and things of that nature, have been listed on computers. So that's another good thing.
Two calls and two texts are.
All right. Why don't we go first to the first text?
Okay, the first text is, I have a 401k, a Roth, and a traditional IRA. I turned 70 in January. Must I take distributions? And doesn't matter if it's a Roth or a traditional.
Okay, well, it does make a difference if it's a Roth or a traditional, because all of your qualified traditional pension plans, whether they are IRAs or pensions, once you reach age 70 and a half, you have to start taking out a required minimum distribution. Not true if it's a Roth, because a Roth is not taxable. And so they don't make you take out the money in a Roth, but they would in a qualified IRA or pension or annuity once you reach age 70 and a half. So if this texter is turning 70 in January, then in the year 2000, that person's going to have to start taking money out of their traditional 401ks, IRAs, or annuities.
Yeah, and a lot of times the first year you take the amount in that traditional IRA and you divide it by 28, and that's about how much your first distribution will be.
Right, and people misunderstand. They think that because you're forced to take a distribution, that it's really a lot of money. It's really, like Tiff says, it's just about 28 is your divisor. So if you had 280,000 in there, how much would you have to take out?
$10,000.
$10,000, right?
Right.
Yep.
Now
So,
you
I
could
mean, it's
roll it
not
over to a
the
charity.
end of the world, and you have to understand with the larger standard deduction and the extra that a senior citizen gets, many senior citizens will start taking their RMDs and not pay any taxes on the money at all. But again, it's something that requires planning.
Right. Yep. A lot of
So
planning.
that you know.
Correct.
Now, what if you just don't take the money? You say, you know what, I really don't need that money.
Right. Well, then whatever you were supposed to take out, you are hit with a 50% penalty of the amount that was supposed to
You
be your
should have taken
RMD.
out. Right. So if you should have taken out 10 and you take out nothing, the penalty is $5,000. So you want to take it out.
Right. Exactly.
You can put it in your investments. You can put it in the bank. You can put it in a CD, but you got to take it out.
Yep.
Right. Okay. Why don't we go to the phones?
Roger was first.
Hey, Raj.
Hello there. I'm just a little confused, but I think the gentleman straightened me out a little bit. I don't make the kind of money you're talking about.
You're not making $500,000. Come on, Roger.
Not in a long time. Lifetime. But anyways, I did get a check just recently. I just cashed it. And I'm not in the areas that you're talking about in terms of the money in that. So
Okay, wait. Let's go back to the beginning. So there's the STAR exemption. And the STAR exemption, you have to register through the New York State website, and they will reduce your property taxes, your school taxes, all right? And that would be for people with income up to $250,000.
that's me.
Okay? So that's all you have to do.
Right. And
Now, the enhanced STAR is for people that are seniors over 65, and you have to go to the municipality to apply for the enhanced STAR. Then there is the bonus that they were giving to municipalities that performed and didn't increase more than 2%, right, Chris?
correct. And that's the check you just received,
got.
Roger. You got the bonus check.
Oh, okay. The state of New York gave me a bonus check.
Yes.
You're a lucky duck, Roger.
That in itself is a
Oxymoron.
that's cool.
So maybe take a picture of it and frame it.
All right, thank you.
All right, thanks, Raj. All right, and then who else do we have, Tiff?
Marty from
Marty.
Kenmore.
Hey, Marty.
Hi, how are you?
Good.
I'm trying to find out. I am disabled on Social Security disability. I'm married, and I want to know. I'm under 65. Do I get enhanced STAR?
Unfortunately, no. The enhanced STAR is for only 65 or older. There is nothing for disabled people.
Gotcha.
But once you turn 65, then you would qualify.
I'm sorry.
Once you turn 65, you would qualify.
Okay, great. Thank you so much.
All right, thank you, Marty. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. And any more text, Tiff?
No, there was a boat fire in the
Harbor.
but everybody's helping the boat owner. So that's what Buffalo's made out of, good neighbors, you know?
Yep, I'll tell you, boat fires are very serious.
Yeah.
Very serious. They just catch on fire like boom.
Yep.
So,
and
okay,
before we go to news, I know it's coming up soon. Tim, our healthcare navigator in charge of EG Health Connect, wanted to make sure people are aware. Starting this Wednesday and then Saturdays, we are having our Connect to Medicare seminars. If you're 65, turning 65, over 65, and you're interested, you can go to our website at egtax.com or call our office at 632-7886, and we can give you more information that way as well.
All right, and this way you can, there are so many tricks to the health insurance. Many people think if I'm poor, I can't get health insurance. The truth is, if you're poor, the state of New York is going to give you health insurance. If you don't apply for it because you don't know to apply for it, it's like too bad, too sad. So you want to make sure if you know somebody that doesn't have health insurance, and the reason they don't is not that they're just being obstinate. They say I can't afford it. You should really call EG Health Connect at our corporate headquarters at EG Tax, and Tim Eliason, the head of our division, will be very happy. He's so knowledgeable, and he has such a compassionate heart, and there's no charge for the service. So, we really want to help you. I guess that's the music for the news. We're going to take a short break. 8030930, 8030930, star 930 on the cell phone. See you on the other side.
We are family. I got all my sisters with me.
Hey, we are family. I'm Esther Gullius, the tax lady. We think of you as family, and we want to help you. So if you have any tax issue, give EG Tax a call anytime, Monday through Friday, this time of year, 9 to 5. We got our website open all the time, egtax.com. And we're going to go to the phones, and we have had Jeff, who's been waiting a long time. Hey, Jeff, how can we help you?
Yes, hi. I just recently purchased a home in Pembroke, New York, in Genesee County, and I closed on it just shy of a month ago, and I was wondering, can I apply for star exemptions right away, or is there certain, requirements I have to meet? Do I have to wait a period of time before I can apply?
Is that your primary home?
Yes, it is.
Then you can go right online and apply.
Okay, I don't have to wait.
Nope.
Okay, all right, great.
Nope. I believe they ask you the old owner, and then you being the new owner, so they know to take it off the old owner's name as well.
Because I thought I remembered something about, you needed to live in the home for a minimum of 3 months.
I don't remember that one.
Okay, all right. Well, that answers my question. Thank you.
You're welcome.
All right.
And
Thanks
while
a lot,
while we're on the topic, there's a text that says, "Is there an income threshold for the star rebate for seniors?"
And it totally cuts off at 83,000 for around
For the-
83,000,
even for the
but
enhanced.
and the enhanced star.
And then one other text on the topic. In the town of Tonawanda, there is a discount on the town and county taxes due in February for low-income disabled people. Not on school, but the town and county.
Right, and that income is under 34,000 for most towns around here, and each town varies a little, so you should check with your appropriate town hall.
Aren't you a wealth of knowledge?
Okay.
And that texter.
Yep.
All right, and we're going to go to Sandy. Hey, Sandy, thanks for waiting. I'm Esther Gullius. How can we help you?
Hi there, Esther. I have a question regarding the Star Rebate Program also.
Yeah.
My daughter lives in East Amherst. I live in Pendleton. We both been in the house more than 15 years. Income is about the same, around $100,000 or less. But she got her check, and I didn't get mine.
Okay, because that was the bonus, right, Chris?
Yep, that's the bonus check, and that's town of Amherst stayed within the 2% increase, and I guess you can check with Pendleton to
say
see
they were bad people.
if they were bad or good, and they may just be delayed in sending out their checks.
But you have to check with them if they were okay within their budget, Sandy?
Professor said they stayed under, But it's a possibility then that the check is still coming.
Yep.
Yeah, why don't you give them a call on Monday? They'll be so glad we talked about this weekend.
All the towns are going to
Right.
love us.
But the truth is, only the checks. I think they got mailed the last week and a half. So it could be forthcoming. But call the municipality and ask them if they stayed within their 2% increase.
Well,
Where your check?
they did.
She said they did.
Okay. Well.
Yeah.
let's see.
So
Where's
it's-
my money?
The check is just delayed, you think?
Checks in the mail. Well, that's what I'd find out. You know, we don't know. You'd have to ask them.
The town doesn't know either. I asked the tax assessor, but she doesn't know.
Yeah,
that's-
I know Chris and I live in Clarence, and we got our check 3 weeks ago.
A couple weeks ago.
Yeah,
Yep. Yep.
yeah.
It might be Erie County was first, and then Niagara County. I don't know.
Yeah. I mean, we would just be guessing.
Maybe by the alphabet or something like
Yep.
that. Okay. Thank
Okay. Sorry we couldn't help you.
Alrighty, thank you.
All right. Thanks, Andy. Okay, and we're going to go to Barb. Hey, Barb. How can we help you?
I'd like to know when that seminar is and Medicare that you talked about last week.
Yep, sure. That's Tim's seminar.
Yep.
and
That's going to be on Wednesday. On Wednesday nights or on Saturdays. It's going to be at our corporate office on Colvin Boulevard in Tonawanda. And if you can call us at 632-7886
to register.
to register in person, or you can go to our website if you're a computer person, and you could register right through our website.
Do you know what time on Wednesday?
Okay, Barb.
Probably around 6:30. But call our office, and it's a great.
Yeah,
Tim
so
is.
if
just really-
evening doesn't work for you, Saturday would be another option.
Okay, you're talking about this Wednesday.
Correct. It's going to be every Wednesday and Saturday going forward.
Oh, okay. Thank you
All right.
very much. I will call the office.
All right, good
Thanks.
enough.
It's
Thanks
so,
for calling.
It's so funny. I was telling Tammy on Friday, I was like, gosh, Tim is so. I walked by his office and he just really takes his time, peels apart all the parts, looks at all your medicine.
It doesn't look at your medicine.
Well, he listen. I'm
Talks to you
also
about what you take.
I'm
right?
also a registered nurse, and he runs in and he says, "What about this medicine? What about that medicine?" I mean, he just really takes his time. He does a good job.
He really does. That is absolutely for sure. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 3930. And before I go on to other tax matters, let's talk to John. Hey, John.
Hi, how you doing?
Good. What can we do for you?
Well, we just purchased a home in Chickamauga, and we're closing the first of the month. And the question I have is, it's both on my name and my wife's name. I am over 65 and retired. However, my wife is not over 65. Do we qualify for the regular star, or do we qualify or can we apply for the?
I think you do qualify for the enhanced star as long as one is over 65. You got to remember
And
there is.
in the income requirements.
Yep,
right?
that's why I was just going to say the income requirements. But I would check with Cheektowaga on Monday and just double check with them.
Okay. Thank you.
All right, good enough. Okay, let's talk about. All right, we kind of touched on it before. These are things that you got to understand. This is September, so we got October, November, and December, and before the end of the year, you have to, if you're age 70 and a half or older, and you have IRAs or pension plans that you have not been withdrawing from, you have to do a required minimum distribution. In other words, you have to call your bank, financial institution. They probably have been writing you as well, because they know you're age 70 and a half, and you have to take the money out before the end of the year. The failure to do this would result in a penalty that could be 50% of the amount of money you didn't take out. Now, the first year is almost 28, the divisor's almost 28. I think it's 27.6, right?
0.4, close.
0.4. Okay, so the divisor is 27.4 of the total amount that you had as of the value of 12/31 of 2018. So that's how much you're going to have to take out. So you want to make sure that you talk to your financial person, your stockbroker, your bank to set up that RMD, because the penalty is horrible.
Right, right. And you can combine, so say you have 4 different IRAs, you can get the total the accumulated total, what the net worth was as January 31st, like Esther said, and divide the whole thing by 27.4 and take out of your lowest performing IRA.
That's for sure.
But if you have a 401k and an IRA, you have to take out of both. You can't just
but
take.
not to but only the 27.4.
Correct. Well, 27.4 out of the
Out of the
401k
total, right.
and 27.4 out of the IRA. You cannot combine the totals.
Right. So when Chris talks about the lowest performing, let's say you have an investment that's been doing about 8% and one that's at 0.5. Obviously, you would take the money out of the 0.5 investment because it's not performing as well as the 8%. So you'd want to take the money out of the one that performs poorer, right?
That's right.
Okay, we have a text here, Tiff. What do we want to
Yep.
talk
It
about?
says, are the fees paid for starting an LLC deductible? Gary from Cheektowaga.
Okay, so that would be in your startup cost of your business, and so yes, it's deductible over. It's kind of amortizable, which is another word for deductible, and so yes, all of the expenses to start your business is deductible in one form or fashion. If you already have a business and you're just doing the LLC again, it would be something that you would amortize.
Correct.
Okay.
Yep. Good question.
So yes, it's deductible, but you can't take it all in one shot. Okay. All right. And then again, 8030930, 8030930, star 930 on a cell phone, 3930 is our text. All right. So other things to watch out for before the end of the year. And this is something we preach all the time: pension contributions, especially if you have a match through your employer. If your employer would match up to 2% or 3% of your wages, if you just put money into your pension plan, you are absolutely just throwing the money out the window.
Right. I mean, don't
So
do that.
think about this. You're making $30,000. If the employer would do a 3% match, so 3% of 30,000 is how much?
What was that again? I'm sorry.
3% of 30,000.
Is 3% is $900.
Right, $900. If you put in $900 in the employer's plan, they're going to put in $900 as well. If you don't put anything in, they put nothing in. So you're actually throwing away 100% growth on that $900, right?
Right. I know I had a gentleman come in a couple weeks ago, and he's like, my company's holding my money. Where's my money? They said they're going to put in 3%. And I said, well, how much did you put in? He goes, nothing.
Nothing.
And I said, well, then they don't put in it. You have to put money in order for them to match that.
So not only will the $900 that you put in be tax deductible, not only is the $900 that the employer puts in tax deferred, because eventually you'll have to pay taxes on it. Now if you put in 9, you now have 18, plus you saved income tax. So you might save another $100 in income tax. So now you have 9, and 9 is 18 plus $100 tax savings. That's $1,900 off of a $900 investment. I don't know. That sounds pretty good to me.
I'd
right?
take it.
Right?
Yep.
But you can put and people that say, "Oh, I have a 6%. I'm putting in 6%. I'm putting in 8%." It's no longer a percentage of your salary. It's now, and you can make your own determination, not based upon a percentage of your salary, as long as it doesn't exceed the maximum contribution for you based upon your age. So you could load up your pension plan if you haven't done anything thus far this year, and make that put all that $20,000 in, for instance, between now and the end of the year, and it would save you a lot of money in income tax, and you'd put the money in, plus the employer would do the match. But again, limited to whatever percentage that the employer is doing the match.
Yeah, I was talking to a client the other day, and he got a raise, and he said all of his raise, he increased his 401k contribution up to his raise. So he said it was no different, but it's just instinctual for him to do that.
Well,
when he
I'm
gets
gonna
a raise,
tell
he
you,
puts more
saving
into his
for-
401k.
Saving for retirement is something. Once you're retired or approaching retirement, you'll be awfully glad to think that you won't have to be on food stamps. You know.
Yep.
All right, and then the other thing is we were talking the other day, Tiff, about adjustments to income. Nobody really talks about adjustments to income. Now, what is an adjustment to income, and why should people care?
It lowers your taxable income, so then your tax is less. So it's really important. It lowers that taxable income, and thus you pay less tax.
And do you have to itemize to have an adjustment to income?
No, you do
No,
not.
it's over and above itemized deductions.
Right.
Right?
Right.
Okay, we're going to talk about those on the other side of the break. I'm Esther Gulias, 8030930, 8030930, star 930 on a cell phone, 3930 is our text. We're going to talk about the adjustments to income that you might be missing on the other side.
And John
Bye-bye.
in the text.
All right, and John in the text. Yep.
We are family. I got all my
Hey, we are family. I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, 3930. And what's that first text, Tiff?
I am 58. My husband is 66. When he turned 65, we qualified for Enhanced Star in Cambria in Niagara County. I guess she's just letting everybody know, so that's good information.
Just like that caller.
Just
Yep.
exactly like you were saying, Chris.
Yeah.
Once
Yep.
one is 65. Well, thank you for letting us know. We appreciate that. And who's our caller?
John on a
Hey,
cell.
John. How are you?
Hi, John. This is John.
Yeah, John. How you doing? What can we help you with, sir?
Well, I'm 74 years old. I started taking my minimum distributions.
Yes.
He either
Okay,
hung up
but-
or got disconnected.
but-
so call us back, John.
But
Yeah, well,
anyways,
we knew he was 74 and took his minimum, but we'll wait for John to call back.
And then,
Okay.
Esther, something important to mention about the RMDs is if you're a charitable person, you can take those RMDs.
Thank you, Tiff.
Yeah.
Thank you, Tiff.
Yeah.
That's great. You know, so if you're somebody that gives money to charity, if you're a charitable person, once you're 70 and a half and you have to take your RMDs, you don't have to take that money out directly. If you're somebody that wants to designate the part of that money to go to charity, because you're going to do it anyway, you can take that money, have it kind of go directly to the charity from your financial institution, and that would mean that it'll be tax-free to you.
And of course, we all know the more money you
Up to
take,
$100,000.
the more your Social Security becomes taxable. So
Right.
that tends
Good
to
point.
alleviate
so if
that
you're somebody
situation.
that gives $5,000, let's say, to church, or you promised the church you're going to get $5,000, and your RMD is $5,000, you can say to the financial institution, send this to St. Mary's, or send this to the whatever church that you do or whatever charity you do. They'll directly send it to them. That would make your $5,000 RMD qualify. So you've done it, but it's not taxable. So.
Yeah.
Thank you. Great point.
Good.
Great
Good.
point.
You know, and I had someone the other day come in doing tax planning. And he was buying a house. He was 72-ish. And he goes, I don't want a mortgage. I want to take money out of my IRA. And we're talking
You
about...
want to take your money out of...
He wanted to take his money out of the IRA.
Italian in your Chris.
No. And I am Italian. I got the
know.
results,
took the
unlike
23
you.
and me. I know. I thought I was. My whole life I was Italian until I did 23andMe. Then I found out I wasn't. Okay.
And he gives me his paperwork. He's like, which one should it come out? And first I did the math for him. I did a and I said, well, this is going to cost you about $30,000. And he goes,
Gulp.
yeah, basically gave him a heart attack in my office. And so I'm looking, I said, you do have a Roth with about $40,000 in it. He goes, yeah. And I said, well, take all that out and you just saved a ton of money.
$30,000.
Right. And then he had some stock that he didn't even care about, which was about $20,000. So by clearing out his Roth and clearing out his stock, he was left with $40,000 left. But by taking that, he'll pay no tax in 2019.
I think that's good planning, Chris.
And then
And that's what's so good about having somebody to bounce things off
Yeah.
of. Yep. It's so important, and
that's what we
EG
do.
Tax, that's what we do.
Yep.
Absolutely.
And when we say we're family and we do it at no charge, we do it at no
charge.
And
Yeah, I was just going to say I was looking at somebody's return. I was doing their 2018 because extension deadline is wrapping up here. October 15th is extension deadline. So I was doing somebody's 2018 return, and then I was looking at her prior years, and they claimed the kids but they didn't claim the earned income credit for the kids because they were in college, but they didn't check the little box that said if your kids are over the age of 18, were they in college full time, and hers were. So, and I added the college credit, so we got her about $7,000 or $8,000.
And that's exactly what happens when you're doing it yourself. You don't know you did it wrong.
Right,
You know,
exactly.
so you can leave a lot of money on the table.
Free isn't free.
All right, so let's talk about adjustments to income. One of the big ones are reservist and National Guard travel expenses. If your duty location is more than 100 miles from your house, those expenses for overnight stay, travel, mileage, lodging, parking fees, tolls, half your meals, up to federal per diem rates are an adjustment to income.
Yeah.
So it means that you get to take it even if you don't itemize.
Here's to our military. Thank you for your service. I did some clients the other day who were reservist, and so I used that itemized deduction, and I also got to chime in.
You mean that adjustment?
That
right?
adjustment. I got to also chime in. They make about the same amount of money, and I did them as married filing separate, and it yielded them about $1,800 better than if they didn't do married separate. So it was a lot more work, but it was worth the $1,800.
$1,800 is wonderful. It's not just an $1,800 deduction, $1,800 in their pocket.
That's right.
Okay, and health savings accounts, that's an adjustment to income.
If you're
so
putting-
you don't have to itemize in order to take this as an adjustment.
Right, and this is money on top of money that you put in through your pay. So if so you put a couple thousand in through
With
your pay.
limitations, though, right?
Right. If you put in extra money outside of that, so if your HSA was with KeyBank, if you went to KeyBank and said, "Here's $500, put in this my HSA," you would get that right off on your tax return.
Right. Pension contributions, if you're self-employed, for SEPs, simple plans, solo 401k plans, those are adjustments to incomes, and IRAs. So if you're somebody that's putting money into a traditional IRA, or SEP or IRA or 401k plan, those are adjustments to income.
Right, and you can flip-flop from year to year. Like, say you had a really good year and you had the SEP, you could put out the money in the SEP because it's 20% of your net profit, basically. Or if you had a bad year and you only made $4,000, you could put the money in an IRA and you could use the full $4,000 instead of just 20%, which is $800.
And remember, if one of you is working, you're married filing a joint return, you remember your spouse, and you're under the age of 70 and a half, your spouse could qualify for a spousal IRA, even though you have a qualified pension plan at work.
Right, yep.
All right, and then other adjustments are alimony paid on prior to 2019 divorces. That's an adjustment to income. Student loan interest. A lot of people are paying student loans. They don't know that they can write off the first $2,500 that they're paying in student loans that's their responsibility and are paid.
Right, and
in
wait,
the tax year.
Going back to the alimony, and Frank is just getting on the call right now. We'll get Frank in a second. Alimony, if you're divorced in 19, on the federal, it's not deductible.
But on New York State, it is.
It is.
How
Because
confusing.
Yeah. Someone asked me the other day, is it easier with the tax changes?
Oh, yeah.
Uh-huh.
Okay, and then again, moving expenses for military is deductible. It isn't reimbursed. And educator
On New York State, it is.
Right. On the federal, it is for if you're
In the military, but for
moving
regular
on-
people.
Right. If you moved into New York State, and educator expenses for if you're a teacher, that's still an adjustment to income. Though I wanted to run through that quickly. And we got Frank. We should do Frank quickly. Hey, Frank.
Hi, I have a question on a health savings account.
Yeah.
If I pay a doctor and they say, "Oh, you overpaid us," and they refund some of what I paid to the doctor, but I originally paid it from the health savings account, and so say I get a refund check back for like $40 from the doctor, do I have to put that back into the health savings account, or can I just spend it?
You have to put it
back in.
Oh, okay.
Because then that money wasn't used. I mean, unless
Properly.
unless you want to pay tax on it and a 6% penalty.
Right.
Okay. All right. Thank you very much.
Good question. Sort of
Yep,
tricky.
And Frank had already stopped and had lunch on that 40.
Ted's was calling
and
him.
the other thing is, just before we go here, I just want to let you know that you can still itemize. even though the standard deduction is higher, you can still itemize. And certainly, if you don't itemize in the federal because of the cap, on New York State you may qualify because their limits are lower than the federal. So that's something you always want to take a look at. So even if you have done your own return and you say, we don't know what you're talking about New York State, the things that are not deductible on the federal anymore due to tax reform are still deductible on New York State. So even though you may not be able to deduct it on the federal, just like Tiff and Chris were talking about, you can still deduct it on New York State, which makes it more confusing, but it saves you money.
And oddly enough, I don't know if oddly is the right word, incorrect, a lot of my single clients were itemizing very readily versus married couples because just the way the new tax law is. And so it is what it is because the standard deduction was easier to get over.
Easier to get to 12 than 24.
That's for sure. So during the week, if you want to come to the seminar, our healthcare seminar, that's Wednesday or Saturday. And you can register on our website at egtax.com. If you're interested in becoming a tax guru, we have our tax school that's coming up.
Really quick tax question. Can you go over the check mark for EIA, earned income credit, and college tuition? What's the income limit for taking the earned income and college tuition credit? And
That's not very fast. Give us a call on Monday at
can you
6.
try to-
But quickly, earned income credit is available for people married filing a joint return up to around $52,000.
Right, that's the earned income credit.
Earned income credit.
you get it to the kids are 18 or up to 24 if they're in college.
And so it's a sliding scale. It starts off at 0 of earned income, and it phases out at 52. It's around the best earned income credit you're going to get is around $18,000 worth of $16,000 to $18,000.
And you can claim the
worth of
college
earned
credit
income.
for up to the age of 24.
Right, and the college credit can be partial. The earned income credit is definitely refundable federal and state. The college credit may be refundable up to $1,000 on the federal, and on New York State $400. Okay, until next week. I'm Esther Gullius, the tax lady from EG Tax. Call us if you want the best tax help. Remember, toss your family with Tiffany Fabian, Christopher Fabian. Have a great day. Bye bye.